Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Good morning, Dan. How are you? Good morning, chat.
Good morning, Matt. Good morning, everybody. Wonderful, beautiful Thursday. And,
oh my gosh.
Market, and not that we can use the expression.
What's happening?
I know with the market
down 40.
Yeah, Houston, we got a problem. Not yet, but I mean, it's like slowly but steadily. You know, when
look at VIX.
Yeah, VIX
over 20.
You know, we're under the 50-day moving average. You know, under yesterday's low. So, you know, maybe there's enough things. You know, again, very normal. But Matt, I think people always are still amazed at, you know, the speed of the downside. You know, but so far it looks like it's been pretty, you know, orderly. I mean, we're you know, in the ES futures, you know, we're only about 170 points off the high of about 6-7 days ago. You know, very normal. But yeah, Google's earnings, I thought they, you know, again, that's the whole, you know, when you're dealing with an earnings, you're dealing with a binary event, and it's like, okay, Google's earnings come out better or whatever. I didn't read the whole thing, but you know, it has nothing to do with better earnings. What did the guys expect? And they, you know, they come out, the stock was up a little bit right after the announcement came out, and now it's down $15 or something, which, I mean, the expected move was $22. So it's not, you know, you say, oh boy, they're pounding it. You know, it's within the expected realm, but I think, you know, I think when you look at Google, it seems like one of the few stocks where they're making a little bit of money compared to some of the other AI ones. Don't you think, Matt? Or, I mean, I don't.
Well, I mean, so this is a great question about Google specifically is, I mean, listen, there's a super interesting podcast that some of the chat may have heard called Acquired. It's very popular. It's a huge podcast. And really? they do like 3, 6, 12-hour deep dives on companies.
Wow.
And the thing that's interesting is when you listen to the Acquired pod about Google, they have been talking about AI literally for 20 years.
Oh, they have Google. Okay.
And the roots of the company go back, like there were people working on like AI, like you could say AI adjacent stuff as far back as like the 60s and 70s. And listen, I'm not an expert.
Yeah.
I'm just parroting what I heard, which I think is accurate. And, you know, it's interesting because like AI has been in the consciousness for a long time. All the sign, like a lot of the major science fiction stuff, there's talk about, like Dune is from, I think we might have talked about this on the show, so I'm sorry, but I just had this discussion. Dune was written in the 60s, and like a big backdrop to the Dune universe is AI. Like why they don't use AI, what it is.
Man, I don't mean to be ignorant, but I am. Dune, D-U-N-E, what is that?
Dune, it was a movie that came out a couple years ago based on a very influential science fiction book that came out. A guy named Frank Herbert wrote one called Dune, and then he wrote a number more that get weirder and weirder. And they've come out with 2 movies. A third movie's coming out. I don't think they're going to make movies beyond that because the stories get really, really weird. And I've not read all of them. I stopped reading them before they got mega weird. Here's how did we get from Dune to Google?
That's okay.
Google to Dune. Google's been focused on AI for a long time, and AI is not a new thing. That's all I'm saying. I think, again, I'm not parroting to be an expert. um, the interesting thing is that, Google's has this alternate chip technology. They have these TPUs that are a different way of doing processing than the GPUs that NVIDIA makes for everybody. And so Google has like their own hardware. They've got, obviously GCP is one of the big top three cloud platforms. Dan, listen, here's the point. People didn't tune in to listen to me ramble haphazardly about Google. ES is down 50. VIX is over 21, Dan.
Yeah, it's getting there. I mean, but what's nice is, here's the thing to me. Technically, if you said to me, are we still in the range of the last month or so, or the last month and a half, whatever? I said, yeah. Yeah, we're in the lower end of the range, right? I mean, we've basically been, I know in SPX, we've been between 6,800 and 7,000 or whatever, or six. And so to me, we're in a range. I guess it's looking at the bright side, right? We're in the range. We've got some good premium here, especially certain strategies like that more than other strategies.
Yeah.
Like double calendars and others.
Oh, Dan, I've got a back test to share. And it's not, listen, I'll just say this. There's a lot of doom and gloom about, and I'll be honest, it has been a tough season for mechanical trading. But I'm going to share back test we shared like a year ago.
Good timing.
No, we shared it in June.
Okay.
And I'm just going to say a couple things. Premium selling.
Ooh.
Zero DTE.
Ooh.
Might be surprised. You might be surprised.
Oh, all right. But again, it's I think overall positive. When you think about, just real quick before the back test, 0-day credit selling. What does it mean? All it means is that, yes, when you put a 0-day on today, will you get more room to your shorts than you normally get? Yes. And that feels nice, and you get a little better credit. But again, you can't have your cake and eat it too. There's a reason you're getting more, but it still is nice, right? And we might have, if we get a little bit of a range bound day, even though, we've had in the last 3 trading days, other than today, we've had two 200-point candles. So you're in a, it's weird. You're in this, hey, range bound happy space, right? But
yes,
you've got some premium saying, Houston, we got a potential problem, or at least a little bit of downside.
Well, and a lot of the 0-day premium people want a high VIX because it is like,
you like it. Well,
high VIX or trending days are easier to trade. What we've had yesterday has been like, it's tough. It's tough, Dan. Yesterday we went down. Do you have the chart pulled up? Can you look and see how far we went down?
Yesterday, the low was in the future 68.62. And right now we are at 68.63.
Okay. So yeah, we're back. We're
yesterday's low right now in the future.
Yes. That's where I was going with this. So, I mean, we had what was the move yesterday? Let me,
it was,
let me fix my eyes here. So on Wednesday, the range was not almost 90 points.
Yeah.
Right. And listen, this chop is tough to trade, Dan. It's tough to trade.
Yeah, it is. But until, it's like, until we kind of break through one way or the other, out of this range. And futures, you might say, below 68, whatever, 68.60, 68.50, maybe a little bit lower, it's been going back and forth, right?
Yeah.
But it's scary, right? Because you feel like, okay, today I'm going to go in and sell a put credit spread on the bottom, and today will be the day that just,
Yep.
Now, but that's why you have a plan. That's why you have rails on your back test that will take care of that. Hey, Matt, can I ask you a quick question before your back test?
Always. I'm going to milk this a little bit longer. We're not showing the back test quite yet, dude.
Yeah, all right.
We're going to wait a little bit longer.
Do you have, like, for people that, you have earnings 4 times a year. And to me, earnings are a very speculative venture because they're binary events. It's not like a normal event. Do you have, like, in back testing, can people, it's so funny. We're talking about Microsoft earnings, or no, yesterday was Google. Well, with our limited brain cells, right, as we think about, okay, what happened last Google earnings? I have no idea. I don't remember. We can look it up. But can you test in the back test? Can you take a Google and say, okay, I'm looking to see, let's say you're an iron condor trader and you say, look, I want to see how many times it was within the expected move where some type of iron condor would have worked. Can you go back and test a Google or an NVIDIA or whatever iron condor in the data? Put those, you'd have to put specific.
You mean test those tickers or take those earnings dates and text SPX?
No, I'm talking about, like, for a stack, test those tickers.
Oh, we don't have those tickers, but maybe someday.
Well, you do have Google. I mean, you could go on the modeling.
Yeah, well, in modeling we do. We don't in the back tester, but again, maybe someday. People have asked. People asked for Microsoft. People asked for Google. People have asked for NVIDIA. And I'm not saying no forever, but you can't. Now, you could take those dates and just back test SPX based on big earnings days.
That's true. You can do the same.
Yeah, but maybe someday you could back test Apple. You could back test Tesla. But maybe we'll get some other big tests
someday. But wouldn't you say that there's a big, it is interesting. When we talk about equities and trading equities, now with the modeling tool, you can look at, which I've been doing a lot of, look at it. I like it a lot. But when you think about it, it's like you hear this big divide. If you look at the top 5 or 6 equity options by volume, they must dwarf the rest of them. When you agree, I mean, if you take your Apples and your NVIDIA and Tesla, I can't even imagine the option. I think, where do you look for option volume? The CBOE used to have a beautiful thing.
Oh, this is Dan, let's hold off on this discussion for a little while.
All right.
But CBOE did just come out with a PDF that I've seen making the rounds on Twitter, and it goes through volume on the top ETFs, the top indices, and the top single stock tickers by volume.
God.
And it's a great thing. And we're looking at it. I'll just say we're looking at it.
Very good. Okay.
Yeah. Because it has been a challenge. I don't think edge is gone in strategies that have worked for a long time. I do think it's been an increasingly difficult season and choppy, but it makes sense to me. We're coming out of, basically, most people that I've talked to, I basically said December and January have been challenging. And VIX has been not as elevated as some of these intraday moves. And it's just made it tough because a lot of trades, no matter what you're trading, are really kind of sensitive to the market moving down 100 points and then up 50 points. Yeah. So if you have any sort of rail on it, whether you're trading a premium selling or you're trading like a butterfly, but you don't want to get too far away, or you're trading a time spread and you don't want it to get in the money, like all of those trades, which are three different trades, can be hurt when you move down 100 points. And then to add insult to injury, you move back up to 50 and it's like, oh, that's exactly where I needed to finish. Too bad we didn't get there a little more directly,
No, you're right.
It's just a tough,
can I make one suggestion here for people? Because sometimes when we say, if you talk to somebody and you say, well, how's your month going? How's your week? Oh, it's horrible. Well, to flush that thought out, that person may be looking at it as their whole universe could be a put credit spread, or their whole universe.
Yeah.
You're not talking normally when I ask people, well, how'd you do trading this month or whatever? it's not, you can't assume that they have some long Vega, some short Vega, different durations, blah, 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 blah. They have one thing maybe. And so what I would encourage people is, when you're thinking it's a rough month, like your strategy isn't working, reach out of your cocoon and talk to people, maybe in the Discord or whatever. Say, are there any strategies right now that seem to be working? Be based on the way the market's moving and volatility. And you know what I would answer you? I'm positive there are.
Yeah.
Right. I'm positive there are. And just be aware of that. And maybe it could lead to some more back testing, could lead to some honest tweaking of your strategy, possibly, or some kind of diversification. But if you're just looking at this rigid, I am a short put person, I am a DC, my child's name is DC. I'm joking here, whatever. And I think DC's, I've said this before, pound for pound, the best fighter in the business. They're the Floyd Mayweather of, but if be aware of, are there other strategies? Even the spinach for some of the DC people, credit spreads are a little bit of eat the spinach. Is there a place for credit spreads? The most DC hardcore
Brussels sprouts.
Yeah, Brussels sprouts. So Matt, I'm getting excited about the back test coming up here that I know you worked on.
Yeah. So I'll show this. I just think it's been super interesting because, and maybe we need to do a whole segment on like some trades that have still been working that have long-term positive expectancy because they're out there.
Well, and even like, what did you say? What I was just thinking as I was thinking about talking, like Troy's small account challenge that he does on Tuesdays, but he's worked hard. What you say, there's some diversification in there.
Yes. And he used trade blocks a lot. I mean, what I'm showing is very uncorrelated to DCs or butterflies or whatever.
Can you explain what you just said, Matt, with trade blocks?
Trade blocks is a tool that is open source, made by a legend in the OO community, and it has some additional stuff to OO that people can use optionally if they want to check correlation and some other things. So you can do that in OO by running a portfolio, which you can run a couple dozen tests at once and see dynamically how they interact with each other. There are people who really like to go deep with the statistics on it, and so they sometimes will go beyond that. But again, it's just been a challenging season. Now, Dan, when was the last time VIX was this high? Do you know? I'll have to go back. Let's take a look.
I want to say less than we think. I mean, sometime in the last month, did we touch it? I want to say yes. I could be wrong.
Okay. I think.
What do you got the data on last time VIX hit 20?
I mean, we had a candle. Okay.
A candle. I agree.
We had a candle a couple weeks ago in January, but until then, like if this sustains, and here's the thing, it's a Thursday. Thursdays can be wild. Now listen, I'd have to look at the data, but from memory, Thursdays usually don't open up down. And a lot of the big movement days are days when they don't open up down. So we're already down, more than almost 40 points. Yeah. So 2/3% in the SPX. The last time it was elevated for a significant amount, you have to go back to like November. And that's when we got up to the point where Troy was like waking up.
Oh,
he was waking up.
But far, Matt, wouldn't you say it's nice. We're at the lower end of the range, nothing crazy, right? It's not like, when you look at a chart of the last even month of trading, it's not like we've blown through the lows, right? I mean, we're just at the lows of yesterday, right? Yeah. And we've had a lot of range. So so far, I mean, I think it's extremely healthy. The market needed a little bit of rain, and this is fine. We get wigged out because we say the market has no right to go down, and it does. But this is good, with the different premium to be range bound and have high vol. If you'd ask people, especially with double calendars, man, you'd be like, sign me up.
Yeah.
Right? You're going to give me kind of range bound and you're going to give me high, decent premium, sign me up. And now that you got it, people get a little, it can be frustrating. I'm not saying.
And what's difficult is sometimes a transition. Like if we get 20 vol and it sticks around for 2 weeks, I think people are going to be changing their tune. I'm not talking about double calendar people. I'm saying like people will be, we're like, as one of the legends said, one of the legends on O said, we're all scraping the same edge, So it's a lot easier to sell premium when you're at 20 vol, I think, than when you're at 15 vol with 100-point moves and 15-point reversions. So that being said, you guys want to see a back test? I think we got a back test.
Yes,
so let me explain what this back test is. Because listen, I do some 0 DTE. Okay. I used to do a ton of 0 DT premium selling. And it's not that it doesn't work. I've enjoyed it less and less. And because we have automation, there's some trades that I really enjoy that I just like more. I'm going to show a 0 DTE premium trade that we've showed on the show before. And it's so simple. Okay. You guys ready? So here we go. So this is from June. Okay. I'm going way back. And if you notice, and so let me give a shout out. Mark Anderson, friend of OO, introduced this. He showed this back in June when we had him on the OO show. Okay. And I was looking through back tests and just trying to poke at some that I hadn't looked at in forever. And so here's what's interesting about this back test. It goes in its dailies. It's Mondays and Fridays. It's got 2 filters. It's got a VIX max of 21. So it's not for super high VIX. And it's got a min premium of 4. Okay. So it's just filtered twice. And it only goes on 2 days a week, right? Monday and Fridays. It's kind of a well-known, like not really a secret at this point that Monday and Fridays are a lot of days that people prefer premium selling. Now they might do it every day, but they prefer Monday and Friday.
For 0 day, you mean?
For 0 DTE. Okay. That's right. Which, listen, if you're into 0 DTE, OO is the place. There's so much 0 DTE activity. It is, it's very exciting if you're into that. Now, let me talk about this back test real quick, because every time I want to get really nuanced here and really in the weeds, because this back test does not have 2 hits at profit target. And I love 2 hits at profit target. And here's the reason why you can make the case, because the whole idea of 2 hits at profit target is you don't want to get punked by like an illiquid print. Well, what are we doing with this back test? We're pretty close to the money here, and it's on at the end of the day. So what you can do to kind of look and see if illiquid prints, it's pretty easy. If you spend a second, you can just go look at some recent back tests and say, okay, we can take the VIX off too. By the way, if you didn't know that, in OO, you can just click these little labels here and remove the different things that you don't need. So all we care about, this is 0 DT end of the day, all we care about is, did we get an illiquid print here? Well, you can see the price of the trade is the yellow. The green is the underlying. And no, we didn't get a liquid print. This is a legit print. What happened is, the trade went up. It was going against us. And then right at the end, we had MOC and the market spiked. Trade went down. We hit a PT and closed. So you can just check a couple of them. Same thing here. This one's a little bit cleaner to see. Take off the VIX. Falls its way all the way down. Again, this is super easy to see. Take off the VIX. These are all good prints, but just because this is how I roll, I'm going to punish this even harder. I'm going to punish it even harder. Well, here's what we're going to do. We're going to take this, boom, and we're going to paste it. And we're going to look at how this is done just since we ran it last time, Dan. And just because I talked about 2 hits, we're going to throw it on. Okay. We're going to throw it on and we're going to run this thing.
Matt, what's the exit on this? Is it exit at what time?
Yeah. So it's already done. Hang on. I got too clicky there. It exits at 352.
352.
And it also has a profit target.
Okay.
And let's look at how has this done since we put on the show.
Oh boy.
Apparently this is all I should have traded the last 6 months. maybe this is all, yeah, it has. So here's what's super interesting.
Range bound. Yeah. It's a range bound.
But it's
butterfly.
only the end of day. It's just, yeah, almost a butterfly, a condor, 40
Whatever.
delta. So what kind of widths are you getting? Well, like on Friday, your calls, you're 10 points wide. You're 10 points wide. You got a 10-point window you're trying to land in. The Friday before that, 5-point window. The Friday before that, 5-point window. The Monday before that, 5-point window. So yeah, you could call it a butterfly. You call it you could call it a half what's a half condor butterfly, Dan? What is one wing a butterfly and one wing a condor? A condor fly? A con fly?
It's too early in the morning for me to think about all
a fly con. It's a fly con. And so here's what's interesting though. I'm just throwing this out there.
Yeah.
This is a simple thing. This is so easy to automate.
Better.
I'm convincing myself to put this back in. Let's run it. Okay, let's look at and I'll drop the link in. Here's the link. Here's the OG link. Okay. Now
the high delta, it's going to be a decent risk reward. It's not going to be like getting 50 cents to risk
so
$900 or something.
Yeah. So you're getting your winner is about 200, your loser's about 260.
How many were exits based on P&L and how many were exits based on time? Was it more?
Great question. Let's do that. Now I'm using since June. So there's a few more data points now. So 162 times it hit profit about a third, 46 times, a little less than a third. The rest are timed exits, right? And there's no stop loss, whatever. You could put, I mean, if you really want to punish it, and I really want to punish it. We can up the slippage to 15 and put 2 hits on and run it recently. And I'll show you the point. The last point I want to make is just about seasonality. And something that Mark does a great job at is stripping out filters, right? And making things, just kind of trying to bring them back to their basics. And some of these trades, I just talked about how people are pretty emotional. And when I say people, I'm including myself as a person. And they go, we go through market seasons. And if you look at this, if you would have said this is a good back test it was basically flat or in a drawdown from May until July. My brain's not working. May of 24 till July of 25. So like when we showed this on the show, it had basically been flat for a good while. And so I'm guessing nobody traded it because they looked at recent performance. And what's happened since then?
Yeah.
This little, I don't know if you can see this right here. Let me do this again. It's done that. So it's just interesting. And it just a point about building a robust back test. Again, I punish this even harder. This has got exit slippage, more slippage, and 2 hits at PT. So like even with those, you're looking at, it did cut down on the profit targets as expected, but I mean, 11% capture rate. Wow. Here, I'll save this updated version.
Man, let me just say one quick thing about slippage. I think when you're dealing with an iron condor, and I have this discussion a lot with butterflies, because butterflies, you can do a call butterfly, a put butterfly, or an iron butterfly. You say, which one should I do? But I'll say one strength of an iron type situation is better execution. The mids move less. You say, why? Because all the options are out of the money, right? If you're doing like we're talking about credit spread, but look at the animals we're dealing with here. You're selling for this trade. You're selling a 0-day 40 delta call and put. Are those going to be tight markets? Absolutely. Are those going to be liquid markets? Yes. Then you're buying an out of the money option, which is less. So it should be relatively tight because they're smaller. Whereas if you're dealing, let's take in call, you do a butterfly, right? You do a call or put butterfly. Well, let's take a call butterfly, 70 wide or whatever. You sell at the money. Well, your long is in the money.
Yeah.
So what you're going to notice is because you're in the money, bid ask is going to be wider than the at the money. You say, Dan, how does that impact me? it impacts you when you get in the trade.
Yeah.
Because if you're looking at especially automated, you're going to watch the bid ask on a call butterfly. In other words, take a call butterfly, compare it today with a iron butterfly, and watch how the mids move. They'll move a lot less with the iron fly because you're dealing with a lot of the money options.
Yes.
I think with here, the only reason it came off was just with all that, you do want to, like Matt said, you definitely want to do 2 hits because you want to see, who are we fooling here? But I think execution slippage should be decent. But
yeah. And listen, I can be, again, you can look through, if we take 2 hits off and run this is a test that you could convince me not to, because at the end of the day, there usually aren't crazy price prints enough to have like, a big impact on.
It's still for, why would you do
I like to punish it harder. Again, I don't know why I keep clicking off this. The test is done. But we can look and see, you can look at the back test and see this is a legitimate hit, right? Like your confidence. Now listen, you can't, the whole idea of back testing is high confidence, right? I want to build a robust back test, high confidence. It is a back test. It's a simulation. It's not a live auction. There is a difference, but I can say with pretty high confidence, yeah, I think you're going to have a good chance getting filled on this. I mean, the trade goes on here and the underlying moves down. We move down, not that much, less than 10 points. And it comes back up to exactly within a point of where we put it on. Yeah, that's a good print. You can tell that by looking at it. And again, it's not most of the time, 43 times here. Again, listen, 15 cent slippage is also probably too much, but I mean, it's easy to look at. It's easy to look at these and say, yeah, this is, I mean, look, we put this on at 60. This is what you want to see with the Condor, right? We put it on at 68.17 and it closes at 68.19. Yes, that's what you want for a Condor. Like if you didn't know, that's what you want. So anyway, Dan, Troy may be back tomorrow. Troy's doing something. He's fleeing for warmer weathers from what I understand. We still have a foot of snow on the ground.
Oh my,
it is flurrying right now. And that is not what we're looking for. But just like the market, you cannot control the weather, can only control the response. So my allocation to the weather is proper hat, gloves, shoes, etc.
Matt, as you're speaking about the weather, ES heard you, and it's ticking down a little more. We're down 53 now.
Yeah, guys. Well, listen, people are going to attend to their trades. On that note, everybody stay safe. We will see you again for an OO show tomorrow. It probably won't just be me and Dan. I don't know who's going to be here, but it's going to there'll probably be some extra people. And Dan, we haven't talked NBA in a long time.
I can't even keep up with what happened yesterday. It was a flurry of activity.
Tomorrow, if Troy's back, we're going to at least have a minute on NBA trade deadline. Our NBA talk has cycled way down.
It is.
And I think people miss it. It's time. Yeah. So guys, have a great day. Stay safe out there. Enjoy this wild market. Let's see what the VIX doing. 21 VIX.
Slowly working its way up there.
Stay safe, everybody.